In this video, we're going to showcase an indicator that you can use to identify bullish and bearish pressure in the market. By incorporating this indicator to your trading strategy, you will be able to not only take long positions whenever the majority of traders are also taking long positions, but also to take short positions whenever they also take short positions. We're going to show you how this indicator works, the best settings to use, and we'll also combine it with other technical tools to create a simple trading strategy so you can have a better understanding of how to incorporate this indicator into an existing strategy. If you find value in this video, remember to leave a like. Let's get into it. So, the indicator that we're talking about is called Trader Pressure Index, or TPX for short. To add it to your chart, you first of all want to go to TradingView. If you need to sign up, link for that will be in the video description. Next, open any trading security that you like in any time frame. Then click on Indicators, then type in Trader Pressure Index and select this one by Red K Trader. The Trader Pressure Index is a trading tool designed to provide insights into the balance of power between buyers and sellers in the market. It aims to visually represent the ongoing struggle between buyers and sellers, helping traders understand who is in control of the price action. It helps in decision-making regarding trade positions, types of trades to enter, and timing for entering or exiting positions. Next, we will explore how we can use this indicator to trade. But before that, let's take a look at this indicator's components. This dotted line is called the control level, and as you can see here, it's located at the 30 point on this indicator scale. And then this thin solid line right here is called the zero line. And as you can tell from the name, it's located at the zero level of this indicator scale. And it's gonna serve as the central axis for this indicator's analysis. The control level indicates the minimum threshold for market dominance. And we will explain more about this in the next few minutes. So stay tuned for that. Next, this green area represents the bullish pressure in the market. On the other hand, this red area represents the bearish pressure in the market. Whenever this green area is above the red area, like here, that indicates that the bullish pressure in the market is now higher than the bearish pressure and is an indication for us to start looking for long positions. Conversely, whenever the red area is above the green area, this indicates that the bearish pressure in the market is now higher than the bullish pressure and is an indication for us to start looking for short positions. Now, the relationship between the bullish or bearish pressure areas and the control level is super important. As mentioned earlier, this control level represents the minimum threshold for market dominance. This basically means that whenever the bullish pressure goes above this level, that indicates that the bullish pressure in the market is now dominant. And this is where you would be looking to enter long positions. On the other hand, whenever the bearish pressure goes above this line, that would indicate that the bearish pressure in the market is now dominant and is an indication for us to start looking for short positions. Next, this line that changes color between white and gray is called the net pressure line. And as you can tell from the name, it's used to represent the net pressure in the market. Whenever this line is above the zero level, that indicates that the net pressure in the market is bullish. But when it goes below the zero level, that indicates that the net pressure in the market is now bearish. Now, looking at the settings of this indicator, we can see that we have several customizable options. In order to customize this indicator for our strategy, we're going to change the average length to 14. The smoothing period, we're going to change it to 7. Then on the Style tab, we're going to change the color of the control level to white. After that, click OK. Next, we will explore how we can use this indicator to trade. But before that, let's talk about HenkoTrade. Now, you may be thinking,
and what exactly is HenkoTrade?
Well, HenkoTrade is one of the most reliable forex brokers out there, and for that reason, I use them every single day. As you can see here, this is my trading history. I mainly scalp gold. And up here you can see that this is actually a live account. The reason why I love HenkoTrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. And for those of you who love high leverage, guess what? HenkoTrade offers a maximum leverage of 1 to 500. And if that's not enough, they're also going to give you a 100% bonus for all your first deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500. So in total, you'll have $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to HenkoTrade using the link in the video description. Now, back to the video. One method that we can use to trade with this indicator would be to enter a long position as soon as the green area goes above this white line. On the other hand, for a short position, we would need to wait for the red area to get above the white line, and then we enter our short position. However, just like any other indicator, this one cannot be used alone. Because of that, we're gonna add two more indicators to the chart. On the indicator search tab, type in parabolic SAR. Select this one by Everget. Next, type in Williams Trend. This one by Red K Trader. Then access the settings of the parabolic SAR indicator. Then on the Style tab, disable the PSAR option and the Trade State Filling option. After that, click OK. Then double-click on the Williams Trend indicator. Then on the Inputs tab, change the length to 14. And then reduce the ATR period to 33. For the ATR multiplier, we're going to change it to 1.5. On the Style tab, you want to change these plot colors to brighter colors. After that, click OK. Now, how can we combine these three indicators to enter long and short positions? Well, let me show you. To enter a long position, these are the conditions. First, the trend ribbon of the Williams Trend indicator should be colored green and the price should be trading above it. This indicates that the market is in a bullish trend. Second, this green area on the TPX indicator should be above this white threshold level. This indicates that the bullish pressure in the market is higher than the selling pressure, which is going to increase the probability of the price heading in the direction of our trade. Third, a buy signal should be printed by the parabolic SAR indicator. This signal candle is going to represent our entry candle. Last but not least, we want to confirm that the signal candle closes above this green plot of the Williams Trend indicator. Having the signal candle closing above this line is going to prevent us from taking trades when the market is ranging. All our entry conditions are met on this candle, so we're going to enter a long position. The stop loss is going to be set at the most recent swing low or right below this yellow line. For the take profit, we're going to set it at 1.5 times the risk. We let this trade run and take profit. For a short position, these are the conditions. First, the trend ribbon of the Williams Trend should be colored red and the price should be trading below it. This indicates that the market is in a bearish trend. Second, this red area on the TPX indicator should be above this white threshold level. This indicates that the bearish pressure in the market is now higher than the buying pressure, which is going to increase the probability of the price heading in the direction of our trade. Third, a sell signal should be printed by the parabolic SAR indicator. This signal candle is going to represent our entry candle. Last but not least, we want to confirm that the signal candle closes below this red plot of the Williams Trend indicator. Having the signal candle closing below this line is going to prevent us from taking trades when the market is ranging. All our entry conditions are met on this candle, so we're going to enter a short trade. The stop loss is going to be set at the most recent swing high or above this yellow line. For the take profit, we're going to set it at 1.5 times the risk. We let this trade run and take profit. In summary, the Red K Trader Pressure Index is a technical trading tool for understanding market dynamics through the lens of bullish and bearish pressure. Its simplicity and effectiveness in representing market pressure dynamics can make it a valuable addition to any trader's toolkit. If you're interested in this particular indicator, you can check it out on TradingView and play around with it and see what settings and strategies you can come up with. As always, remember, the strategy showcased in this video is not financial advice. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.